Hey guys, welcome back. Okay, so I'm going to do a little video here and show you how I used um, my volume-based Patterson boxes algo in order to capture some really large moves, both on some penny stocks today, as well as on some larger caps. And I'm going to explain to you what the algo does. So you really don't even need to buy the algo if you don't want to, because I'm going to explain exactly what it does, and if you can see it on your own, you don't need it. So don't hang up on this video because there's going to be some information here. However, if you do want to buy the algo, it makes it a lot easier to, number one, spot the trades, and number two, to find the trades in the first place. So we're going to talk about some penny stocks because I did a couple of penny stock trades today, and we're going to talk about some large caps as well too. So really what was moving today was MEDS, and MEDS is a penny stock. It was trading at 4. It gapped up to 6. So that's not a big gap percentage wise, really, especially for a penny stock. Now this is it's only a 51% move. Now the thing with MEDS is it had a low percentage of the float that was short. It had only 0.15% of the float was short, but it was a micro cap. The float was only 3 million. Okay, so that's a really important number. I want you to keep that in mind. There was a 3 million float, and it was a relatively low market cap of 33 million, right? So keep those two things in mind. It's really important you understand those two things. Now, when it gapped up this morning, and what you see is that the price stayed within this range, and VWAP was pretty flat, right? See how VWAP was really flat there? Now, what my algo does, and what you should be doing, is the algo specifically measures when there was a large high volume move followed by a relative low volume move. Okay? So this was a large high volume, and these two candles right in here is when the algo started printing. Right now, this algo kind of extends a little bit forward, so I'll take the extensions off just so you can see that if we shortened up a little bit, you'll see a little bit better. Okay, so there's the two candles that the volume dried up. So you've got a large volume move, and then you get the volume dry up. Now, what you're basically doing in a trade like this, and this is a little bit too early, we're only 15 minutes into the day, is you're leaning against these high volume buyers. Does that make sense? Because if price went from 4 to 6 on high volume, okay, now we could look at the extended hours, right? Sorry guys. If we went from 4 to 6 on high volume, you want to lean against those buyers because that's a big demand, especially on a low float stock. Okay, so what was the volume when this happened? Well, we need to look at about a 15-minute chart for that, and we can see the volume was close to 16 million. Remember, this is the 3 million float stock. So you have a tremendous amount of demand for this stock. Okay? And let's go back to a 1 minute here. So, assuming that we take the pre-market volume into effect as well too, we could add that up, right? But I can tell you that in the pre-market, the volume was approximately right there, sure about that. Yeah. In the pre-market, the volume was approximately 30 million, maybe 31 million. Okay? So remember, we're seeing massive demand for a low volume float. Okay? That should say something to you right there, right? That should be huge, right? Okay. Massive demand, low volume float. Now, if price were to have instantly rejected that level, in other words, you would see rejection at that level, then all this demand would be trapped. Those guys, those people that were buying, right, would be trapped. And that's why you want to pay very close attention to the first 15, 20 minutes, right? See how the market is price being accepted or is price being rejected. Now, this went on a little bit further. So what my algo did is it measured when this volume right here dried up, and the trade is to get long on a break above or get short on a break below. But in this particular case, if you would have got long there, you would have put your stop down there. So that's not a bad entry. Okay? Now, in this particular case, the market went sideways and it traded as a tremendous amount of volume. Here it is almost 11 o'clock. And look at all this volume. Now ask yourself a question. What is this volume? Is this continued demand? Or is this price rejection? Or is it profit taking? What is it? Well, we don't know just yet. Right? We don't know just yet because all this demand in here could be just profit taking from this move up here. So everybody that got long is taking profits in this level. That could be, right? And here's where the algo becomes very, very powerful. Now, if we take a look from the start of the day, we have now a move that has gone 72% on massive demand. Remember, this has a 3 million float. And the market cap, which is the supply, is, or really not really the supply, but it's really the volatility in it. The market cap is basically telling you that it's put in a 72% range on that demand. Does that make sense? Okay. So taking a long here on this breakout makes a tremendous amount of sense. Right? And this is where my algo becomes powerful. Now you could have calculated that all on your own. You can see here, again, the algo's measuring when volume dries up and then taking that breakout, right, on a big measured move. Go and watch the video I have, I think it's 2 videos ago, on exactly how to use my algo. But I'm showing you how to use it on a penny stock because it's really, really powerful on penny stocks too. So that being said, taking that breakout and putting your stop, either the first one would have been a long here, stop here. Let's say you're risking $350 on that one, right? Or if you take the second one, either one, we'll do both. Either one was valid. Or the second one was a long here and a stop there, risking $350 on both of them. Okay. Now, the second that it breaks out, any shorts that got short in here, see this big red volume here? We know there's at least $3 million worth of shorts that got in on that trade right there, right? Any shorts that got short here are going to start getting squeezed above this high of the day. Does that make sense? right? So you have all these longs creating demand, right? And no supply. Listen to what I'm saying. All these longs creating demand and no supply to 3 million float. Okay? There's no supply with massive demand. Then you get the algo. You're leaning, the algo is basically having you lean against all that demand. So the algo is very good when you get a measured move and then you get a low volume node, and then the algo will signal you to either get long or short. And in this case, the long was very, very easy. Okay? Now, as the prices spiked higher and higher and higher and higher and higher and higher and higher, right? All the way to 10, your first trade would have made you 3.5 on your money. So a 350 risk would make you $12 or $1,200. Your second trade at 10 would have made you 5 to 1 on your money, or $300 risk and $1,700. Okay? Now, all right. The other thing you have to do is you obviously have to check out higher time frames. Right? And if you had been checking the higher time frames on MDES, you would have seen that there was previous levels which provided strong resistance. So this stock has a history of spiking and rejecting. It has a history of spiking and rejecting. So in this particular case, unless it cleared that high at 1164, there was a high probability that it was going to fade based on its history. All right? So you wouldn't have wanted to overstay your welcome in this particular stock. And I happen to like the round number of $10 where I had a resistance level, and that's where I would have got out if I got the long. Now I'm going to be very honest with you, I did not get the long, okay? But I'm going to show you how now you can use the exact same philosophy of using volume to predict a reversal in the market. Let's go back to a 1-minute chart. Okay, so we had that resistance at 10. Now we know there was resistance at 10. Why do we know that? Because boom, it hit that level, rejected. It hit that level again, rejected. It tried to go through that level again and rejected. 1, 2, 3 times. Okay? So it's struggling very, very much with this level. Now, what I really want to do is pay attention to how much volume is taking place in this area. So let's now go to a higher time frame and look at that volume. Let's go down to like a... Here's see if we can calculate that. Okay. So there's a 15-minute time frame. Look at the amount of volume that is taking place here. Sorry guys, forgive me. Look at the amount of volume that is taking place at that level. Do you see that? So if we add that up quickly, by the way, John Burroughs, if you're watching this, if you could make me an indicator that would do this for me a lot easier than me having to figure it out on my own, If you add that up, you'll see that that was approximately 5 million, 20 million, 45 million, 55 million, almost 60 million worth of volume at that level. Now remember, if there's high volume, it means one of two things. It means either A, there is demand, which we would see that demand because we would see prices go considerably higher. Does that make sense? We would see prices go considerably higher. But prices did not go considerably higher, and as a matter of fact, it struggled with that big $10 level. So that is telling me another story. That is telling me that this volume that's taking in place in here is either profit taking or new sellers. New shorts coming into the market. Right? That's one of the two things. It's either profit taking because price is going sideways, or it's new shorts coming into the market. It could also be new longs coming into the market. Sorry, I'm wrong about that. Could also be new longs, couldn't it? Right? So now we get down to my little box again. Either way, if it's new longs coming into the market, they're not able to push prices higher, which means that the demand supply dynamic has balanced. The demand supply dynamic has balanced. Otherwise, it would push higher. Now you'll see here, during this entire time that my boxes were printing, never once did the box break out to the long side. And that's why these boxes are so powerful. The box broke out to the short side here. So taking a short here with a stop right there is a great trade. And that's exactly the trade that I took. Now, I'm going to be very, very honest with you. I did not get the entire move. I just got all the way back down to VWAP. And I got 2-to-1 on my money. Right? So I wish I could tell you guys I'm a genius trader, but I'm not. Right? But you can see here the boxes never broke out to the long side. Right? They broke out to the short side. You might have been stopped out on that one. Right? Now, once this level cracks, it means that all this volume is going to now, if any new longs that are in this, once VWAP breaks, any new longs that are in this, they're still not that scared, right? If you're long, you're still not that scared, and you're not taking a lot of heat on this trade. But if VWAP cracks, and you're long, which all this volume that's happening in here could very well be, all this volume in here, it could be new longs, and we know after the fact that it's profit taking. We know after the fact it's profit taking, right? But I want you to understand the supply and demand, right? If all of that volume that we discussed earlier around this level was more demand, was demand outstripping supply, price would have flown to 15 or 20. But it didn't. It just went sideways. That told me the story. And the longer it went sideways, and the more volume there was, the more the story became palatable to me. And that's why I took the short. Once VWAP cracks, you can see now you've got all these longs in here that are going to bail. Because now they're upside down and they're trapped. And that is what caused the stock to flush all the way down for the rest of the afternoon. Now there still might be some longs in this because that wasn't a really big move. But tomorrow this could be a bloodbath. Because if there's still these longs in the market and they get trapped again, they're going to panic and flush the market even lower. So keep an eye on MEDS tomorrow. But that is why my algo indicator is so powerful. But you have to really understand the dynamics of it. In the context of high volume, high demand, and a directional move, you wanted to use it as a continuation trade. In the context of high volume and a sideways, non-directional move, you wanted to use it as a fade trade. Okay? If you like what you see and you want to understand, how can I start using this? You can start using it by looking at the volume yourself, but the algo makes it really, really easy to spot it. Okay? So I've done a couple of videos before this one on the algo. It is currently for sale right now on my website, and I'm going to do something really, really cool. In the next little while, if you buy the algo, I'm going to throw in my stock and forex VWAP course or my penny stock trading course. Actually, you know what I'm going to do? Yeah, I'm going to just throw in the penny stock. I'm going to make it a package. The algo plus the penny stock trading, you get those for the price of the algo. Remember to mention that to me when you talk to me. Okay? Thank you guys. Love you all. I was going to talk about some other stocks today that I use the algo for, but this video is already 21 minutes, much longer than I wanted to go, and it kind of demonstrated the concept that I wanted to demonstrate. Okay? Love you guys. Bye-bye.